What's going on, guys? Green Leprechaun here in the building, better known as TCI. I want to make this video before the end of market close so everybody is aware the significance of tomorrow. If you're watching this after market is closed, does not matter. The same thing applies because we are talking about data and possible escalation here in this video. So hit the like button, subscribe to the channel, do what you guys got to do. Does not phase me either which way. If you guys want to see me in a green leprechaun outfit, maybe it'll help AMC get some green boom boom candles. Hit the like button for me. If we can get this video to 1,000 likes, I will do that. Don't have high expectations, but nevertheless, shout out to Edward Morgan for that idea. So let's talk about exactly what's going on today. Briefly, AMC is down about 4%. The broad market, the S&P 500, down about 1.16%. So it has been a very bloody last couple of days. As you guys can see, we've basically fallen off of a cliff. We are under our 430 support level, and we are closer to our 420 support level, being at $424 on the S&P. And why I talk about the S&P is because that pretty much dictates what's going to happen with AMC. If we're down a lot in the broad markets, AMC does always go down as well. We don't live in our own bubble, and as we do know, if you are an ape holding for the MOAS, you need to see the markets coming down in order to see the MOAS. But tomorrow is a very important day because we have a couple catalysts that could affect the markets. It could be a very bullish thing or it could be a very bearish thing. So let's talk about exactly what's going on tomorrow. And the key data point is going to be this: PCE prices quarter over quarter. That's going to be at 8:30 a.m. tomorrow morning. So that's why I had to make this video now, so you have time, if you're watching this right now before market closes, to make up your mind on what you think is going to happen. And you might be asking yourself, why is PCE so important? Well, this is the key data point that the Fed looks at. They don't even look at CPI as much. They look at PCE. And if you type into Google, because Google knows all, right? What is PCE data? A measure of the prices that people living in the United States or those buying on their behalf pay for goods and services. The PCE price index is known for capturing inflation or deflation across a wide range of consumer expenses and reflecting changes in consumer behavior. So if this PCE number comes in higher than market expectations, you're going to see a sell-off in the markets, and it could be a quite dramatic one. And the fact this comes out at 8:30 in the morning, by the time you guys are able to trade your portfolios, it's going to be too late. You got to make your decision now what you think is going to happen, and I'm going to give you guys my take on that here in this video. But at the same time, if PCE comes in under expectations, right on expectations, or at least the same as where it was in December, you're going to see a very bullish reaction. Now, there is a chance we see escalation tonight between Russia and Ukraine, and that could be another negative factor that weighs on the markets, just like it is today. We have announced more sanctions on Russia and the Nord 2 pipeline. We're going to talk about that in just 1 second. But if PCE comes in higher, if we're looking at the worst case scenario, if it comes in very high, and the market last December, we had a reading of 5.8%. So if it comes in higher than that, probably going to see a bad reaction in the markets. But what that is going to cause is market participants to start pricing in possibly a higher chance for a 0.5% rate hike. We're seeing the odds for that actually going up today, where even yesterday we were at 70.2% probability for only a 0.25% rate hike. Now we are at 68.3%. So the market participants, about 2% of them are now over the past day leaning to that 0.5% rate hike side. And that data point, I cannot stress it enough, that is what the Fed pays attention to, and that is going to dictate what happens to the markets tomorrow. But even on top of that, we have a lot more economic data that is coming out. Besides just that, we have the GDP price index. We do have the GDP growth rate quarter over quarter, continuing jobless claims, GDP sales, real consumer spending, and then like we just talked about, the PCE prices. So a lot of different data points, but that big one is definitely PCE. If GDP does start to reflect that it is slowing down as well, just get ready. You're going to see a lot of volatility and a lot of pain in your portfolio. So that's what I really wanted to stress here in this video. But let's take a look at exactly what is being said now about the Russia-Ukraine situation, because on top of that, you do have the Russia tensions, and the whole market, they don't care about Russia-Ukraine as much as you would think. This sell-off is really based off of the Fed and somewhat the fear that this is creating, but this is really a sideshow, like I've said many times, compared to the Fed. So it says, Biden announces Nord Stream 2 pipeline sanctions. U.S. President Biden formally announced new sanctions on Nord Stream 2 AG, a registered Swiss firm whose parent company is the Russian gas giant Gazprom and its corporate officers. Excuse me. These steps are another piece of our initial tranche of sanctions in response to Russia's actions in Ukraine. As I have made clear, we will not hesitate to take further steps if Russia continues to escalate, the president wrote in a statement. So that's a little bit different, sanctioning even the officials here. And why they're doing this is to try to clamp down on the government, because if you're a rich person in Russia and you have dedicated basically your life to helping the Russian government and the economy grow and all that, you know, investing in the country, and then you start to get sanctioned because Putin wants to draw new territories in Ukraine, you're not going to be a happy camper. You're not going to have a lot of people that are happy with you if you are President Putin. So if you mix that with the fact that you're likely to see a invasion here in the next couple of days, if it were to happen overnight tonight, not trying to be the bearer of bad news here, if it does and you get bad numbers, PCE related and GDP growth related, just expect to see some pain. Now, this is not the time to panic. This is not the time to sell out. If you sell out now, you are selling at the bottom of the barrel, in my personal opinion, and I would never tell anybody to do that. I wouldn't tell my mom to do that. I wouldn't tell my family to do that. I wouldn't tell nobody to do that, and I'm not going to tell you guys to do that. People that do tell you that are trying to spread fear, uncertainty, and doubt, and they're probably hedge funds in the comment section, because who sells out at the bottom when everybody else is buying the stock? Pretty interesting. Now, let's take a look at this real quick. AMC CEO Aaron boosts ownership in cinema chain as grants vest. And we could see that it says CEO Adam Aaron has boosted his stake in the company as previous share grants have vested, a move back up following his share sales of late 2021. Aaron acquired just over 1 million shares through the vesting of prior year performance stock units, according to AMC's SEC filing, with nearly half of those withheld from insurance to satisfy tax obligations. Aaron's filing was one of 9 the company issued for executive stock vesting. As you can see right here, the move left him with direct ownership of 793,000 shares, nearly quadrupling his holdings. So I think a lot of people, you know, are not really up to date on this, but he's actually quadrupled his holdings, not let alone the 1.5 million shares that he has interest in that are unvested shares. So I think that's a key to point out, that Adam Aaron is still with us. He's still loading up on his positions. Sure, you can say whatever, he's sold out. He's fucking 68 years old. Get over yourself. He's older, and I would tell any of you guys to do that if you were in that situation and you had just, acquired a lot of wealth and you had 95% of your wealth in stock. You should definitely diversify at that stage in your life. So get over yourself if you're somebody that is mad at Aaron over that. That's unrealistic, and maybe you're in this for the wrong reasons if that is the case. I'm just going to give it to you guys straight on that one. As far as a brief little update on the short interest, 20.88% current shares that are sold short of 107.18 million. Cost to borrow max is going up a little bit right now at 2.32%, and the utilization is at 100. So that's still a very good sign right there. Even if the cost to borrow max went to say 10 or 20%, I don't think you'd see a lot of firms willing to lend out their stock, as you have not recently, and it's really has not moved over the past 7 days, still at 100%. Days to cover at 2.31, so that is also looking good. The option order flow is 0% positive. You're not seeing any really bullish behavior in the markets across the board. All of these look very, very bad. pretty much any stock I've looked at is in between 0 and 20% positive order value, which is not good. On a good day for AMC, you're looking at 80% positive order value. So that's just showing you guys the level of fear that is in the markets at the current moment. It's not that good. So that's really what you guys need to know as far as all of that is concerned. My personal opinion is we're probably going to see a red day tomorrow, because literally firms are saying right now, if they go on CNBC or they go somewhere else and they're talking, right, they're saying that they are selling the rips. They're not buying the dips. They are selling the rips, and that is just streaming out and broadening out from indexes to everything. They're selling the rip. So do what you guys got to do. I just wanted to get you guys this information before the end of the day. If you're somebody that watches these videos, you should benefit from it. Me personally, I have some Apple puts on right now. I have some debit spreads. I sold the 155 calls for April, and I bought the 150s, $500 max profit, about $150. So that's really how I'm hedging out my portfolio, as well as I do have some USO April calls as well for the $72 strike in case Russia does invade Ukraine. And that's really all I'm going to say on that. Not a financial recommendation. I don't know what's going to happen. The markets might rally, but that's the information you need to know. So hit the like button, subscribe to the channel if this is helpful in any way, shape, or form. Thank you guys for watching. If you guys want to join the trading community, link down below in the pinned comment down below. Links for free stocks in the description of this video. Moomoo does not use payment for order flow, and you can get up to 5 free stocks if you deposit $2,000, deposit $100, and get 3 free stocks. So thank you guys for doing that, and I will see you in the next one.